We're joined once again by Jim Bianco. He's the president and CEO at Bianco Research. So, Jim, we've talked a number of times during this crisis period, and I guess on this day, this April 14th, where's your head at in terms of how you're thinking about both the evolution of the virus here in the U.S. and around the world, and how the markets reacted? Because I think the stock market has been quite enthusiastic in the last couple of weeks, and perhaps not deservedly so.
Right. Everybody's hoping, and right, we've got solid evidence that we might be seeing a peak in the number of cases, and that's a good thing that's been going on. The market has been doing, pretty much what you would expect it to do if it was a bear market. It's very common for a market to retrace 50% to 2/3 of the prior decline. It did it 3 times in 2007 and 2008. Usually you get to the point where we are now and you see Jan Hatzius and you see David Kostin and you see the Michael Wilson of Morgan Stanley all kind of abandon their bearish call. That's it. The low's in. It's all over. That's what happened with all the 50% retracements in 2008. It happened in 2000 as well, too. So I don't think this is anything more than a bear market rally. Why would the market go back down if the virus is peaking? I think the big question that we'd never touch is what's the long-term ramifications of this? When we restart the economy, are we going to just say, hey, it's January 2020, let's forget about those 22,000 dead people and let's just go back the way we were? And you can tell from my sarcasm, I don't think we're going to do that. Or are we going to have changes in the way that we behave, changes in the way that we do business? I think that's more likely the case. And in that case, I think you're going to find getting all the way back is going to be tough. And we're going to find out that there's been some impairment of business. And that's why the market, I think, will struggle after this rally.
And, Jim, just thinking about those changes on the other side of that, I mean, we're in a recession right now. We're going to be in recession probably for a couple of months, if not a couple of quarters. Do you have any thoughts on how you think things might look different in 6 or 9 months that are just not part of the consensus right now?
Yeah, I think, well, first of all, not only are we in a recession, but the second quarter alone, if the consensus is right, will be worse than the entire financial crisis of 2008. And that doesn't include what will happen in the first quarter and what might happen in the third quarter. This could very well be the worst recession we've had since the Great Depression. So it's going to be bad. We're looking at minus 20 million jobs, a number that's hard to understand for the payroll report in the first week of May as well, too. But I think that there's going to be, 2 things that if you want out a consensus from this. I think there's going to be a backlash against these shutdowns and I think against these quarantines. I think a lot of people are going to be very angry at what happened. Millions of people lost their jobs. There was a big disruption in everybody's life. What we needed to flatten the curve. That's not the issue. But did we need to do it in such a draconian way? And did I need to lose my life savings or my job or my business? And that's where I think you're going to see some anger come out of us. Usually you don't get that in the middle of the crisis. It comes afterwards. And I also think that they're going to divert that anger by taking it out on China. I was astonished over the weekend when Larry Kudlow, Mr. Free Market Capitalism is the best path to prosperity, saying the American government should pay companies to bring back their operations to the United States. That's kind of an opening salvo, I thought, of we are really going to take it out on China. I don't mean militarily or anything. I mean economically. We're going to take it out on China in a big way. And I think that that's going to be the deglobalization and the anger that this could come with is going to really hold back the economy. Not going to cause a Great Depression or anything like that, but to get back to those January 2020 peaks and assumptions, I think it's going to be a tall order.
Does that also play into, if this is indeed a bear market rally, what is going to be the catalyst that brings us lower? Do you think the anger is part of that, or is it going to be more fundamentals or earnings season? What is it that will get us out of this momentum to the upside?
Well, I think part of it will be fundamentals and earnings season, to take your second part last. Analysts are happy to tell you that they're getting these earnings numbers wrong. I'm just not equipped to take down my earnings numbers to the extent I need. Look at the big miss that we had on JP Morgan this morning as well, too. So they're slow in bringing these numbers down. So in about 2 or 3 weeks, when we get the second quarter numbers, they're going to be materially worse than we are now. The market is going to be overvalued by a lot of measures. If it doesn't do anything, just by the expectations that are coming down, because analysts are very, very slow in these types of environments, and they brag about it. And so, there's no way we could do any kind of valuation on the market at that point. I also think that the other thing that's going to be a little bit nervousome for the market is what's been the underpinning of this rally is that we've got the all-in Fed. They're doing everything. They are, I've argued in other forums, they're nationalizing markets right now, and they are going unlimited. And if the market starts to stumble, you can rightly answer, well, if we got an unlimited Fed and it can't continue to move forward, it is now. But if that indeed is the case, then you got to ask what other tricks up their sleeve do they have? Because they've pretty much thrown every kitchen sink they've got at the market as well, too. So this, like I said, 50%, 2/3 retracement on the first bounce back. It's exactly what we did in late 07. It's exactly what we did in the spring of 2000. It's exactly what we did 3 times in 1973, 1974. And I could go through a whole bunch of other examples for you. This is not that unusual for a bear market rally.
All right. Jim Bianco, President, CEO of Bianco Research. Always good to hear from you. Talk to you soon. Thanks for joining.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.